Industries, that's the big ET Now exclusive, and we understand that SoftBank is looking at a possible transaction with its visionary founder Masayoshi Son having his eye on global tech majors like Yahoo and Alibaba. Now they have recently looking at Reliance Jio. Let's take it across to my colleague Ajay Sharma. He's joining in with all the exclusive details. Ajay, give us a sense as to what you're gathering about this deal and about SoftBank's Vision Fund, because there are several marquee investors as well who have investors in it. Why does Jio make sense?
Well, that's correct. We are gathering from our sources that the legendary investor SoftBank and Masayoshi Son Vision Fund is actually looking at making investment in Jio, and is doing a due diligence right now in Jio's assets, which are recently carved out in the InvIT platform, and they are studying the entire chain because they believe that by investing in Jio's platform, which is actually a technology-enabled telecom platform, which also has plans of e-commerce, exactly the kind of stuff which SoftBank historically has been interested in, be it Alibaba, be it Oyo Rooms in India, or even Yahoo historically. All these have common themes of scalability, telecom, and of course e-commerce, and they believe that Jio makes perfect sense. Our sources are saying that they usually SoftBank looks at investments which have much bigger scalable proposition. Jio of course has it, and the new man at the helm of Vision Fund, which is Rajiv Mishra, that the team is looking very closely to make investments in Asia, Europe and China, and Jio is one of the companies which they are doing due diligence with. We reached out to both the companies, SoftBank as well as Reliance, and the SoftBank did not want to comment on speculation. Reliance did not offer any comment, but we understand that this money raised, which could be sub $5 billion, would be utilized to cut debt, and Reliance has gone on record that they want to cut the overall burgeoning debt, and monetizing the assets is one of the plans.
Thanks for that exclusive, Ajay, and that's the big story we're tracking there. Now, earnings continue to remain on our radar as well, and ACC is the one that we're watching out for today. Binod Modi joining us to take us through some of those expectations. Good morning. What are you expecting from ACC's earnings this time around? We have seen some amount of volume growth. Are you expecting a good set of numbers this time?
Of course, we expect a very good sort of number for ACC. And considering the fact that overall cement sector has been in flavor for last 2 months because of substantial improvement in realization across the region, especially in southern, where ACC has significant presence of around 30% of ACC's total capacity lies in southern market, followed by western region, where again also we have seen decent kind of realization improvement. So overall, because of the factors like strong realization growth as well as the volume growth 6 to 7% that we expect for ACC, we expect ACC should report around 30% kind of EBITDA growth, to around 550 crores, excluding other operational income. That's what we feel. And EBITDA per ton wise, we expect it to report around 700 rupees per ton.
What is the outlook then, Binod, when it comes to margins, not just in this quarter, but the sort of margin trajectory that you're expecting from ACC?
Yeah, margin one, of course, as I said, EBITDA per ton 700 rupees per ton means EBITDA margin should be decent compared to previous quarter in the last year. Again, margin, as I said, there should be impact of this reduction in fuel prices, what we have seen a couple of months, as well as the reduction in diesel prices. The impact of these two should be felt in this current quarter. So definitely margin wise also companies should do very good numbers.
Are you seeing this sort of a margin trajectory continue, this sort of 15-16% trajectory continuing for ACC?
Yeah, we feel because there would be certain sort of earnings upgrade also, considering the fact that only 2 months of realization growth would be there in this March quarter, whereas in the June quarter there would be substantial realization growth, with the fact that also we have seen decent kind of realization improvement in this current month also. So considering all this, all together, that should, that should lead to, decent earnings growth. And I think the margin what we get, in this current, in this quarter 4, that might be better in quarter 1 also. And that's in considering as on that, considering the current status of scenario, I think margins upgradation would be there, and this margin should sustain.
Okay. Binod, what would be your strategy then on the counter? What do you, in terms of, how to sort of place oneself, on against the stock ahead of earnings and post?
So we in Reliance, we are quite clear, before advising any stock, any cement stocks, to any investor, we look basically, kind of scalability, what any company has, plus the valuations comfortability. So as far as ACC is concerned, we are comfortable in terms of the valuation. ACC is still trading, at discount compared to other peers, whereas scalability, as I said, of course, though a couple of months back there were some concern regarding its capacity constraint, but with the recent announcement of capacity expansion, I think that concern has also gone away. So I think ACC should be a good bet in cement space.
All right, thanks so much for joining us, Binod, and taking us through the outlook there on cement.